Good afternoon, traders. This is Christian from Trade Trade Group, and this is your end of day as well as end of week market video for Friday, January 17th. You made it. We finished the week very strong. Very nice performance for the week. I'm going to give you that performance for the week. I'm going to tell you how we did overall for the week. Break down indices and sectors and tell you what performed the best. I'm also going to give you a sense of what's doing well for the year. I just put my spreadsheet together for performance for the year, and we can kind of see what's been outperforming. We'll put some numbers to actually, maybe what you think is going on for the year. Before I do that, risk disclaimer: everything that I'm going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through is for information purposes only. So just another quick thing before I kind of get into some of the numbers. If I ever seem negative about a group or about certain stocks or something like that, all I'm doing is being objective. I tend to, I have an error here in the spreadsheet. Bitcoin was not up that much, but I think it was up at one point. Let's see, 4.4% is where we finished. But all I'm doing is kind of giving you what acted well versus what didn't act well. I'm not, or didn't act so well, right? I'm not giving you any of the emotion or telling you, making predictions like, oh, this was down, but it'll be up next week, right? I'm not doing any of that. I'm just telling you this acted very well versus this didn't act well. Because if I give you the more objective view, right, what I try to give you is some takeaways from this video is just tell you what is. And what is acting really well and what's acting poorly and what's kind of not doing much of anything. Right. And that can help you formulate decisions and maybe open up some ideas and maybe switch around your game plan a little bit based on some of the actual facts and so forth. So, but every once in a while, you'll hear me from like an outside view, you'll probably think, oh, he's really negative about this group of stocks and he hates that stuff. I will judge them based on what they do, right? Not about how much I'm in love with the stocks or have emotion about the stocks. What I'm trying to do is take the emotion out. All right. So that's my little footnote before we get into this. But here is the performance for the day. And what I'll note too is, again, all I'm trying to do is give you some good observations about where it was to make the money. And if you look at the performance for the day, we were met with another gap up today. Now, a lot of that probably had to do with monthly options expiration, because not only was it monthly options expiration, but it was also when you have January expiration, a lot of stocks have what's known as leaps, right? You can buy options that go out to a year. Now, there's a couple different maturities throughout the year for that, but they're mostly when you buy leaps, they're mostly January. So it becomes a bigger expiration for stocks than it is for other months. And then of course you have to watch the quarterly expirations too. Those are bigger for the indices. All right, which we just had one of those in December, and we had index rebalancing and all that stuff. But so we did have another gap up today. And if you noticed, so for example, like looking at the small caps, they were up 0.4% today, but they opened up 1%. So they gave back over the session 0.7 point. So not the easiest day to trade, I would say. Very nice if you're holding longs. And basically that's how it was all week long, in my opinion. You had to kind of pick your spots this week. And if you thought that you were going to come in and do a lot of day trading, I think that, and again, I'm more of a swing trader, so I can't speak to day trading, but I would think like if you came in with like very little exposure every day, you kind of had to fight a little bit of an uphill battle because you were underexposed, and all of a sudden everything is off to the races. Case in point, the Qs were up 1.7%. That's a huge move, especially when you counter in what these things did yesterday. And it did not look very good yesterday, by the way, for the Qs. As I went over yesterday, I was really, basically saying how those names and the Magnificent Seven names really saw profit taking and rotation out of. Case in point, Apple was down 4% yesterday, but that's a really nice move back in the Qs. But again, they were up, they opened up 1.9%. So again, it goes to my point, which we do, we talk about what we know. We know that the majority of gains over time in the stock market are made in the overnight market. They're not made during the intraday market. And buying the close and selling the open happened I think worked just about every day this week. Probably not every day, but probably 3 or 4 days out of this week. That's where the majority of your gains were made by buying the close and then selling the open. So if you did that, for example, yesterday, you would have made 1.9% in the Qs, right? If you try to trade during the day, now again, this is just simplistic. It's basically what happened from the open to the close. The Qs actually went down 20 basis points. SPYs did nothing, right? Now, again, we're not talking about the whole intraday movement. We can talk about that in the chart, but all I'm talking about is what happened from the opening print to the close, and all of the indices, especially small caps, gave back gains. So again, I'm not complaining. I'm just kind of showing you that even though the IWM sold off from the open, it still gained 4% for the day, right? But again, the reason why I'm giving you this information is because if you came in and you try to do a lot of day trading today, you probably you may have gotten lucky with a couple positions. That's fine, but the majority of those gains happened in the overnight market. What did well today? Uranium stocks did well today. China stocks did well today. The President Trump will be official on Monday, and he made some more um, dovish, I would say, comments about China and working with China, right? Plus, they had some data that happened overnight that finally caused that group to go and up 3%. And actually, I think it had good gains for the week. Also, again, taking a look at what I also like to look at these days is what performed better. And you could see down here that growth did better, and I think most of that coming from the Qs being up so much, but they were up 1.3%. And value stocks were up a little bit more than 0.5%, but value stocks actually gained over the session. There was actually a little bit of profit taking and growth. Now, again, you have to take that with a little bit of a grain of salt because they open up so so much. When something opens up 1.9% as the Qs did, it's going to invite some profit taking that happens. All right, so that's the story there. I also just want to look to see where we are while I have first of all, and also what didn't do well. Those clean energy stocks, cyber stocks kind of sold off through the session. Software again was so again, this is really weird. For the day, software stocks finished up 1%, but they opened up plus 2.1%. There's a bunch of broker upgrades. I think there was two different brokers that upgraded some different software stocks. So that was the big catalyst for the software stocks. But if you bought them on the open, you didn't do so well because they actually declined 1.1% over the trading session. Again, why am I spending so much time here on what happened during the trading session versus what happened in the overnight session? Because I want to know where there's profit taking versus where people wanted to do some buying. And if you go further up here, you could see stocks like agriculture stocks went up. Oil went up again today. Gold miners actually went up today from the open. All right, so let's talk about year-end performance and where we are. We're now, if you look at the right column over here, sorry, that's month to date. So you could use this month to date is going to be year to date. So so for SPY, we're up 1.9%. For the Qs, up 2.1%. Mid caps are outperforming quite nicely. I've covered that in a couple of these videos this week. IWM is up 2%, and look at ARK and the IBD 50 are both up 5%. So very nice performance there for some of the actively managed ETFs. Values outperforming growth 3.2% for 1.3%. Small cap growth is outperforming small cap value. Bonds right now, year to date, they are essentially flat after going down in the beginning of the year, then then increasing this week. So we're essentially about flat. The dollar's still up, and look at Bitcoin is up 12.4% year to date. I'm going to cover the sectors in just a minute. Figure we'll just walk through a couple of the indices and where we are. So very nice. I don't want to complain about this because this is a very strong week. We're now back above the 50-day moving average. The bullish 80% rule is in effect for this value area because we started the period inside value. We broke outside, and now that we're back in, it is officially triggered the 80% rule, looking for a move by the end of January to 606.50. I will say this. I would watch right now for like short-term stuff, we did break into the value area, which is good. We're basically back to where we were at the highs of last week. So that'll be something to watch. And a little bit of short-term, there's another virgin point of control up here, which marks some overhead supply. So that'll be a battleground of buyers and sellers. That's at 602.82. Let's go to the Qs. The positive development in the Qs today, right? I've been talking about lower highs, right? And about this channel, this downward channel that we're in. We poked its head above the channel. So still not out of the woods in terms of lower. We're still don't know if this is a lower high yet. We haven't been rejected. It felt like a rejection yesterday, but this came back quite nicely today. Reminder that one day is not a trend. And 527.27 up about 1% is your next area of resistance. That's the top of the value area. IWM, like I said, advanced slightly for the day because it gave back that pre-market pop and basically finished back where we were on the highs of the last couple days, right? So that's IWM. Again, mid caps, I think very interesting. And if you look at this on the weekly chart, now that we're full, this is a closing week, right? You could see that's a monster engulfing candle from the last three for the last 3 weeks. Someone asked me on Twitter, I believe, or on YouTube, if what's the criteria like for bullish engulfing candles? Um, it's just basically telling you, it's giving you information. Like there's no assurance of making money after a bullish engulfing candle. It just means that price went lower and basically was strong enough to take back. It's usually a bullish signal. Do I have any numbers behind it, or is there any guarantee? No. And if you're looking for guarantees, you're probably in the wrong business, because it's not the way it works. We work on probabilities, right? So it's usually give you that it's usually a bullish signal when you have a bullish engulfing, and when there's a bearish engulfing, it's usually a bearish signal, right? It's just basically how it works. All right, let's go through a couple of the other ones. RSP had a good week, right? That outperformed quite nicely yesterday, and also bullish engulfing. What about QQEW? Also bullish engulfing, right? And we know that we saw big expansion. Again, I put this in my midday note on Substack, which you could subscribe for free if you want to know my positions and new trade ideas. Then you can sign up. It's $20 a month. But if you just want the free version, you can kind of see what I'm putting out here in terms of telling you about how many names made 4-week new highs versus 4-week new lows. Again, I've spent a lot of time on this because I think it's valuable information. And I think at one point the number was 40%. 42% of the S&P, that's a very large number, made a new 4-week high today, and only 4 names in here, so less than 1%, made a new low today. So again, that really shows to me, it shows me that, the strength in this market came back, right? Not just, the price action. Again, you need to look at two things to kind of confirm one another, right? The price action, you could look at the indices, but you don't know whenever the price goes up. And for example, in a market cap weighted index, it could mean that there's only a few names pushing the index up because they're so large. Or it could be, or is there a big representation? We know that this is a pretty big representation because look at all the different sectors that made new 4-week highs today. And again, what's dominating here? The industrials and the financials. Now there is plenty of other groups in there too, right? The tech is in here, but tech is 30% of the overall S&P. So it's really, kind of just average performance so far, right? And healthcare kind of perked up today. A lot of healthcare names made new 4-week highs. So we'll go through some of these sectors. I just wanted to go through so that's the indices. We could talk a little bit about sectors. One second, bring this spreadsheet up. All right. So this is my relative strength weakness sector watch list. It's basically short-term momentum. Why is it short-term momentum? Because I'm looking to see if price is above the 50, the 5, the 10, and the 50-day moving average. Once price is above all those 3 moving averages, you know that you're clearing and you've got some momentum. So financials, right? We just talked about how that we're seeing great breadth in that group. There's a lot of names breaking out to 4-week new highs. Not surprising that the overall group is strong, right? Consumer discretionary did pretty well as well, with Tesla doing pretty well today. So that group gets back above and is now showing strength. Industrials, we talked about them showing great underlying strength. Energy, that's been one of the best performers year to date. That's been strong now for the last couple of days. And then utilities have also are up there. Biotech remains weak. That's one of the only sectors that's exhibiting relative weakness. Oil and gas falls in line with energy. The semis, will bring up that chart too. And then aerospace and defense, which I continue to like that group a lot. That one also showing relative strength. So let's go through these. Let's go through a couple of these really quickly, and we'll do this on the weekly bar, so that you can kind of tell. I mean, that's a great looking XLF weekly bar. Again, by earnings. Here's XLY, also bullish engulfing. Not quite as large of a green bar, but still can't really complain about that. XAR, we'll go to this one next, right? Also, kind of the same thing. You're seeing this theme of just really nice bullish engulfing candles, and this one above the nicely above the value area for the year. Industrials, different looking. Again, look at the support here that we held very nicely. This was a name, by the way. It falls under materials, but I've been talking about Deere for a while, and about this gapped up like this, it pulled back. This is a member of the TTG trend portfolio. That is a colossal green candle. And look at, by the way, how well the support of 407, which is this year's value area, held very nicely. SMH, which has been very, very sideways. I think we need to see more out of the semis. There was a couple upgrades that fueled the group, right? Very thin value area for the month. And, I think what will be, so you've got a nice level to watch here. That's 256.76. If you want to go long the semiconductors, right? It was also Intel. There was some news on Intel today, which helped the group significantly as well. Watch 256.76. The two names that I continue to really like are Broadcom and Marvell. We did see, which I mentioned during pre-market prep this morning, we did see a nice call buyer in AMBA. Different looking chart, but also had a nice week too for this one. So that's that group. What did I not cover here out of the sectors? Financials, consumer discretionary. I did not do XLE. Here's which got above the value area for the year. Here's XOP. Right, also just barely. So watch 145, right? Also with crude, I talked a lot about this crude chart. We did not break the value area for the year. So if you're looking for a really bullish signal, because all crude has done is basically come out of this lower range, the heavy lifting still has to occur there at 79.52, and that would be for crude to move higher. So even though I have positions in oil, I think we want to see that. Also, nat gas futures. I think this is the one that we want. Also failed to kind of move higher again. So we'll just kind of have to keep an eye on these, but they did not close at the highest levels of the week. All right. Let's also look at the performance for the week. So again, I'm giving you a lot of numbers here. TLT was the standout that really kind of helped things up 2%. Small caps had a big week, up 4%. So did diamonds. Right. It's amazing how similar these two act sometimes together, even though they have nothing to do with one another. Then value outperformed growth 4.1% for the week. Let's look at also for the year. And here's sectors. Right. Again, I'm not going to go through all of these because I think it's more important to go through the year's numbers, which I have right here. So here's what we have so far year to date. You got crypto stocks. We mentioned that Bitcoin is up 12.4%. Let's look at that chart. Why don't we? Here's Bitcoin on the weekly chart, challenging those previous highs. You can maybe draw, I'm not going to do it right now, but you could maybe draw a triangle type pattern. That's what you've got there in Bitcoin. And that's your crypto stocks are your best performer so far. I may not have every single group in here, but I've got a lot of them. Oil services up 10%, XOP and XLE, they're all up about 10%, right? I've been kind of, talking about energy stocks since the beginning of the year. I wasn't quite as bullish right in the beginning of the year, but I thought that they might be a group that moves. I got that one very right so far. Semis are up 6.6%. That's a nice start to the year as well. Metals and mining, medical devices, IHI is having a good start to the year. Home builders as well. Agriculture stocks are up 5.3%, as well as material stocks. Those are two areas that really underperformed last year. We talked about a lot about industrials. Where's XLF on this list? XLF is also up about 4%. Then I highlighted a couple areas that are big in the S&P. Tech, mentioned 30% of the S&P. It is only up 0.7 of a percentage point. So it is underperforming and it's actually dragging. Here's XLK, by the way. So again, it has some more work to do. Now, why am I not getting really negative on tech, or why am I not going to badmouth tech? Because most of tech has not reported earnings yet. And I've said this multiple times so far this year, a dip going into these earnings reports, I think is very much welcomed. It's much better. It'll be much better setup for them rather than them breaking out to all-time highs, right? Because the expectations will be too high. Let's keep those expectations kind of low and in check, right? But so far, tech has been an underperformer. Consumer discretionary, also a big part of the S&P. It's up 2.2%, so that's kind of in line. IGV software, has not performed very well towards the tail end of 2024. Also, so far, it's basically flat. All right. So you can find winners in tech and in software, but it's a lot harder because the overall performance is not so good. Consumer staples are underperforming, and so is biotech, which is down 2.3% for the year. That's a good wrap up for now. I will go through single stocks for members over the weekend. Here's how our watch list did for the week. Not too shabby. And if you look at what I mixed in here, right? I've mixed in, you've got, Robinhood was in our watch list. That did very well. CLS, that was a standout name last week. When the overall market was weak, CLS was not. It was actually still breaking out to new highs. Tesla put in a good week. This is from my triggers, so this isn't the actual performance. This is like CRS had a huge week, right? That's a steel name, very nice. ALSN, right? Name probably not on a lot of people's radar, but it came up on my earnings watch list from, that's why we put together earnings watch lists. JP Morgan with earnings had a very nice week, up 6.3%. So again, notice like ETR, and I was very upset that I did not trade this one, but this was up 6.1%. Also HWM, which I did trade. So I did trade this one. I did trade a couple of these. That was up huge this week. That was one of my better trades. And again, notice where I kind of went to. I went to things that I thought were setting up very well, regardless of whether they were a growth or value stock. I don't care. Whatever, like, as long as it's a good setup, I'm going to take it. I don't care if it's a consumer staple. I don't care if it's a healthcare company. I don't care if it's a utility. Money is money. It doesn't have to be a high growth stock that everybody on Twitter is talking about. Now, I traded some of those too. That's fine. GEV has been a huge winner for me. And I did actually check out of this because it reports earnings next week. I'm not going to hold it through earnings in my trading account. In my other account, I also have this position on in the TTG trend portfolio. I'm going to carry that through because that's what I do. I hold names through earnings in the long-term trend account because I don't have any name that's over 3%. So I can kind of bear that with that. But in any event, those were a couple nice winners for me. Let's just go back to this for 1 second. But yeah, another one too is EQT, which is in the TTG trend portfolio, did very well. But man, I mean, that was very strong in terms of performance. Even Ollie's, I didn't get to trade this one. That one was like, again, just looking for something different. This is also a name that very nice technical move here, filled the earnings gap and then came back quite nice. All right, I'm going to leave it there, guys. Have a great weekend and hope to see you in the training room. You can go to tribecatradegroup.com, check out a membership. If you put in, I think it's coupon code TTG new, you get 50% off your first month, which is a really good value for you to check out what we're doing on a daily basis. Have a great weekend, everybody.